Hello traders, welcome to the video. This video I want to show you another powerful boom and crash strategy. This strategy you can use it to catch spike to the upside at the same time to sell market to the downside. And the good thing about the strategy again is that it works on all the boom and crash markets, but I'll be showing you examples in the boom and crash 1000 and the 900 market. If you look carefully on my chart, this is 1 minute time frame and this is boom 1000. So first thing we want to do is to set up our chart. So you click on this indicator icon over here. The first indicator we'll be selecting is the RSI. Click on this F icon on the main chart. Scroll down a bit. Relative strength index. Make your period to be 1. Apply to close style 1 pixel. Select color of your background. If your background is white, select white. If it is black, you select black. The levels, click on this pen icon. Add level. Type 10 and 100. Style, make it 1 pixel and select color of your background. The reason why we want to use this level is to make sure that all other indicators are following this RSI. After that, click on save. The second indicator we'll be adding is the envelopes. Click on this F icon on indicators Windows 1. This is envelopes. Make a period to be 75, shift to be 0, deviation to be 0.9, method simple, apply to close. For the styles, make it 3 pixels and select color of your choice. After that, click on save. The last indicator is the moving average. Click on this F icon on indicators Windows 1 again. Moving average. Make a period to be 1, shift to be 0, method to be simple, apply to close. Style 3 pixels, select color of your choice. After that, click on save. So after setting up your indicator, your chart will look exactly as what you see over here. First thing you want to pay attention to is the zoom level. Let's say this is the innermost zoom. You want to zoom in 3 times. 1, 2, 3. So this is the best zoom level for this strategy. These are my indicators. I have the moving average. I have the envelopes, which is this red and this blue. And you can see the level of the RSI, which the envelopes are following. So first thing you want to wait for is, if you want to catch the spike, you want to pay attention to this red level. You want to wait for when this moving average is coming closer to this red level. So it doesn't mean that it will touch the red level, because immediately it touches, you are likely to have a spike to the upside, just like you see over here. So immediately it is coming close to that 10 level, that is this red level over here, you will enter your buy. Then you will wait for market to retrace for like 5 candles, immediately have a spike to the upside. So you can see, let's say you enter here, generate 3 candles, then you have this spike. So once you have 1 or 2 spike, then you will close your entry. But sometimes market can continue to spike to the upside, maybe if that point is the point where market changes structure to the upside. Those type of trades depends on your analysis from the higher time frame. But in this strategy, we just want to focus on catching 1 or 2 long spikes in this time frame, which is the 1 minute time frame. So if you want to catch the retracement to the downside, that is if market moves from one spike into a retracement level, so what you want to pay attention to is this moving average enters into the blue line. Like I said, it is the same thing over and over again. So once it enters into this blue line, then you want to wait for retracement. Once you have 2 retracements, you will enter your sell, and then you will hold your trade until when it breaks the recent low. So over here, you will enter your sell at this point, and you wait until when it breaks this low. Entry will be here, stop loss will be above here, retrace, then hit your TP. Okay, that's what I'm saying. If you look also over here, you have the touch here, you enter your sell, your target will be here. The market comes to the price itself at a higher level, then it falls to the downside. But if you have another entry here, one entry here, you are likely to have a little bit drawdown here. Market comes to the downside to even sweep the main low that was your initial target, then continues, even sweep all these lows that you see over here. So all these lows over here can be your target. So you can see this is a very perfect example. You have market coming from this red level, spike to the upside, enters into the blue level. So you can see that this is when you have the touch of the blue level, enter your sell, then your first target will be this low, because this is the low before this strong spike to the upside. Retrace, spike, retrace, have it sweep this low before it retraces to the upside. This is another spike example. Don't forget the zoom level is very important. So you have market retrace, spike, retrace, spike. About to touch the 10 level, you will enter your buy. Then you have retrace a bit, you have a spike which is long, you can close your trade here, and if you still wait a bit, you have this long spike to the upside. Entry here, stop loss here, you have your TP around this point. So let's go to the crash 1000 market. Everything you are looking for are the same. It's just that we sell if you want to catch the spike in the crash market, and we buy if you want to have the retracement in the crash market. So we can see market retrace to the upside, about to touch this blue line which is around the 100 level. As you are about to touch that line, you can enter a sell and then you will wait for spike to happen. So after the spike, you can have your stop loss here, another spike, retrace, another spike. Instead, you want to wait for 1 or 2 long spikes to the downside. So after this spike, you can decide to close your trade, or you can wait for this another spike. So it enters into the 10 level. Once you have it dips into the 10 level and market is retracing to the upside, you enter your buy. Then you hold your trade until when you take out this eye or this eye or this eye. You can see you have the takeout over here. The market comes to retrace, aiming for this eye. So we are likely to reach this eye, or we can have spike to the downside. But our initial target should be this eye, because this is the eye before this low. You have market retrace to the upside, about to touch the blue line which is around the 100 level. Enter a sell, you have a spike, retrace, spike, retrace, spike. You can close your trade around this point, or you can wait and close your trade around this point, having your stop loss above here. It all depends on you. Let's say you want to catch this spike. I know this is not a good example. So what you will do is to have your entry here, that is before it touches the red line. Then you will wait for market to generate 5 to 10 candles. So within that 5 to 10 candles, you want to see a spike to the upside. So over here, you see 3 candles generated. You have this spike. Immediately you have this spike, you can place your stop loss here, or you can break even to your entry point, because you don't expect market to come to take you out. Then you can leave the rest to run to the upside, because you have nothing to lose now after you have this spike. And after this spike, you can also close your trade. That all depends on you. Then let's say you want to catch retracement to the downside. So what you first need to do is you want to see spike enters into this blue line. Once you have the entry, then you want to see 1 or 2 retracements. You want to enter your sell, and here you use your stop loss immediately. So in buying, that is in catching the spike, you place your stop loss after the spike. Then in selling, that is catching the retracement, you place your stop loss when you enter the market, that is immediately you have the retracement, then you will place your stop loss. So this will help you to manage your account. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.